Hi again, it's Dennis Fugel, CPA, Winnipeg, Manitoba, Canada, Chartered Professional Accountants. You're on the channel Let's Talk Business. Today I would like to talk to you about topic salaries and dividends. What is better to have? So the answer is it depends. I'm sorry, there is no black and white on this one because it's not only personal preferences of the people, but it also what things each of these types of income triggering. So first of all, people who have their own business, and I mean not self-employed, I mean corporations. Only people who have corporation can declare to themselves a dividends. If you're self-employed, you cannot declare to yourself a dividend because you do not have a corporation. What is salaries and dividends? So dividends, this is payment of money from the corporation after tax. It means that company already paid corporate taxes for this and you taking this money home to yourself. What is salary? Salary is basically expense in your corporation and you paying to yourself amount of money for the services that you provided. Now when you're paying salary, it's expense in the corporations, it's reducing your income, and if your income was $100,000 and you pay yourself a salary of $80,000, now you have income of only $20,000, and on this $20,000 you're going to pay corporate taxes. So from one point of view it's good, you pay less taxes in the corporation, but from the second point of view you already paid your taxes on a salary to the government. Now let's discuss about salaries vs dividends. As I said before, dividends, money paid to owner of the company after the corporation pay taxes. Salary, it's different. Salary, this is something that you're paying during your work or time period in the company. And you're usually paying on a monthly basis. It depends. Let's talk monthly basis because it's easier. You can receive bi-weekly, half monthly. It's easy to explain if you're receiving it once a month. Okay, so if you're receiving once a month, of course we're all paying CPP and we're paying the taxes. As a business owner, you're not paying EI. You're exempt. You don't need to pay EI unless you ask from the government permission to pay for yourself EI. Usually I'm not suggesting this, but some people would like to. It is their own preference. Okay, so let's come back to CPP. So when you're paying to yourself a salary, it's triggering a lot of events that can help you in the future. For example, salary trigger you pension, salary triggering OIS, old age security, salary triggering you some different supplementary payments when you get old. Salary triggering you RRSP room. Basically your RRSP is based on your salary multiplied by a percentage. And then this is the amount that you can put in your RRSP to the pension. As long as your salary growing up and up and up, you can take more and more money to your pension. So you can see this triggering a lot of benefits that will benefit you in the future, not now, when you get old. Now, also salary can trigger some government help to your business. For example, not so long time ago in the COVID-19, when we all remember all this lockup and people didn't went to work or start work remotely, the governments came to the businesses and they knew that people not buying as they bought before. Yes, and there was a real problem that businesses will close the gates, close the doors. So the government came to them and say, as long as you paid salaries, and you can prove it, you can give us the salaries, we're going to help you to pay the salaries to your employees. We're going to cover most of your expenses. There are still some portions that you need to pay, but not 100%. So the government, we all remember that government came like with helicopters and they start spreading the money to the people. So this was a smart way to help to the business owners because they said, okay, so if you pay salary, we're gonna cover, for example, 75%, 90% of your wages, okay? This is what you need to do. This is a step. This is eligibility conditions that you need to stand up. And if you're standing, you are eligible to receive help from us. And it's only because you paid salaries. This didn't work with the dividends. If you paid so far dividends, you were not eligible for the help. I remember this time when I was working in office, a lot of business owners came to us and say, we want salary. Doesn't matter, we want salary, start paying us salary retroactively. Because in order to fit the eligibility, the criteria, that the government said, you need to have salary for a certain amount of time. And they agreed and wanted us to do for them salaries. And they knew about interest and penalties because they did not pay source deductions on time. And they knew that, and they were willing to absorb it in order that government will help them with their salaries for themselves, because for the employees they're always paying salaries. The dividends only owners of the corporations receiving dividends. Okay, I remember this. So as you see, salary have important role. Also, banks, you would like to receive a mortgage. What bank asking from you? The bank asking from you wages. Or what is your wage? Sometimes it also can ask your corporate tax return, okay? That you will come and this will be in combination with your wages. But again, the financial institution asking for wages because the banks like to see stability and consistency. It's consistent and it's stable. More, with the salary, there's no surprises. You know exactly how much taxes you're paying, and you paid. There's no tax bill at the end of the year for additional taxes, unless there was a mistake and you paid less than you're supposed to. Sometimes it can happen, some glitches, or it was calculated incorrect. So it can happen that you paid more or less, but usually with the salaries, you have less surprises. Where with the dividends, because it's after tax money, you're taking money from the company, you're not paying any source deductions, CPP and taxes to the government. And when you pay, when the company gonna give you T5 slip, and the deadline is March, end of the March, so it's very relevant to the people who have their own companies, and the wages it's end of this month, February T4s, and T5's dividends is T3 slips, it's March, all investments. So this video comes very handy, okay? So you can ask right now your accountant to calculate for you right combination between dividends and salaries. Okay, and they're preparing for you a dividend slip in March, and then you report on your income in April, so you're gonna pay taxes in April. So with the dividends, you are deferring taxes, but in the end of the day, you still need to pay them by the end of the April. You're not paying for all the calendar year. You're not even paying for the first 3, almost 4 months of the next year. But in the end of the day, you're paying. All the tax planning, by the way, is basically we deferring the tax. We're saying, okay, you're gonna pay taxes. It's only a matter of time when. Okay, we're deferring this day that you're gonna pay, but you are gonna pay them. In some certain circumstances, you may not pay taxes at all. But why? It's because you have credits, some triggering credits in your company that offsetting tax payable, but there are still taxes. It just only was offset by the credits that you had in your corporation. So as you can see, salary have crucial part in our life because it's triggering a lot of benefits when you will be old. It's also triggering you some criteria to receive help from government as long as you pay salaries. With the dividends, it's a different story. Dividends, the government not giving you this candy because with the dividends, you're not paying to the pensions. You're not contributing to the pensions. You're putting money in your pocket, and you're reporting once a year in your personal tax return. So you're not eligible for any pension, any benefits from this. That's why people with the salaries, I must say, you need to open salary account, payroll account, and every month you need to take money, certain percent, and give it to the government and deduct it pass it to the government. Now, if you're not going to pass on time, there will be interest and penalties on you. Because, like I told you, everybody like consistency, and government also like consistency. It's need to be paid on a monthly basis. That's why I'm saying in a salary you don't have a surprises. You know exactly how much you're paying. And you know when you're also paying. So when you're coming to the end of the year, there's supposed to be no surprises, not like with the dividends. With the dividends, if you're horrible on paying on time, maybe it's a good solution for you. But you should know in a pension when you grow up, when you grow up, when you get older, yeah, you won't have pension because you did not put any money. Your RRSP did not grow because RRSP depends on the salary. Your CPP, you did not contribute to CPP, so there is no pension CPP. Other funds may be also limited for you because you enjoyed life now and you did not thought about older days when you're going to be dependent and not independent. So that's why it's very hard to say what's better because it's personal preference. In my thoughts, it's better combination, salary and dividends. And we can calculate for you the best combination between these two. Also in Canada we have integration method. What does integration method means? It means that whether you're receiving salary or dividends, for example $100,000 in salary or $100,000 in dividends, you're supposed to pay exactly the same amount of taxes. Okay? So there will be no difference, no preference for you to choose salary or dividends. Does this integration works? Yes. Is it perfect? No. There is still difference. Sometimes in favor of salaries, sometimes in favor of dividends. For example, the difference is going to be very small, very minor. I calculate for some person, he came for me for the consultation, he received his company in a contract, he gonna pay for him X amount of money, and he wanted to know what is better. So I calculate for him a few options. First two was only salary and only dividends, that he will see how much taxes he paying on the salaries and on the dividends. And the other combination were salary and dividends together, different proportion. Okay? And he choose what suits his needs and he suits his preference. Doesn't matter what I propose for him, it's what he choose. What situation choose him. He did not choose my option. He chose one of the options. I suggest to him, listen, my suggestion from all this is giving you more benefits in the future when you get old. But you free to choose whatever you want. And he choose different options. But again, that's why in my example, I'm not giving dividend numerical examples, because it's all personal preferences. If you would like that accountant gonna calculate for you what is better, please come for consultation, no problem whatsoever. We will see it, we will ask your preferences, what numbers are we talking about, and we're gonna do the calculation. And then we can sit together and you're gonna choose what's better for you. But in general, you should know dividends versus salary. Salary triggering a lot of pension plans when you get old, and not of a lot of funding that government can help you, like in COVID-19. If you were receiving salary, you were eligible for help from government. If you were receiving dividends, it is not triggering anything. It's not triggering CPP because you're not contributing to CPP. You're not triggering CPP, your pension. Not contributing to RRSP room. No, it's not contributing to any plans, older plans when you are in the future. You're just taking care of yourself right now because you want money right now. And then the government not giving you this candy and saying, listen, the candy is a salary. This is in the end of the day. That's what you're going to receive when you're going to be older. And to tell you the truth, do not count only on CPP. You must have more plans in your sleeve, in your pockets to have it. CPP is not enough, period. It's not enough when you will grow up. If you're relying on CPP, it's a huge, huge, huge mistake. You should have alternatives in addition to your CPP, funds, savings for your older days. You must have it. Only in this case, you will be able to live, I don't know, everybody depends on the lifestyle. Some people $1 million not enough, some people 50,000 enough, some people 20,000 enough. It all depends on your lifestyle. So you should save according to your lifestyle, okay? So it's very important to have more than one plan. Government is good, but do not always rely on yourself. You should be independent. And this is the goal, to have independency when you're gonna grow up, not dependent on your kids, not dependent on the government. Depend on yourself. Take care of yourself now. Start saving now. So by saving this and saying that, I would like to summarize salary VC dividends. Now you know the benefits of salaries and the benefits of dividends. Person who may be not so good paying monthly social deductions to the government because he know he gonna be late, and maybe dividends better approach for him. Although my suggestion is combination between them two. If you're going by salary, it's also triggering a lot of benefits when you will get older, but the combination of two of them, you're basically enjoying from both worlds, and it also can help you. But again, it's matter of preference. Depends what you prefer. Some people will salary, don't want dividends. Some people want dividends. Some people want combination. I know all kinds of people, and it's their decision. So on this note, I would like to say to you guys, have a nice weekend. If you have any questions, please go to my website, alphabetacpa.ca, or my email info at alphabetacpa.ca. It's gonna be on the bottom of this video. I'm always posting my website and my email. You always can go to my website. You can read a little bit about myself. You over there have my contact information. You can shoot me an email. I also have over there 2 videos that are describing the difference between CPA and bookkeeper, and you can also find them on the net, on the YouTube. On the YouTube, I posting all my videos, and you can find these topics also on YouTube. Have a nice day. Have a nice tax season. Bye bye.